let's kick off. I have a question that I think, at least I would like some input from Udo, definitely from Oliver, and definitely from Mr. Ademola. How does Nigeria, the UAE, and the UK compare in offering attractive real estate opportunities? I really want you to talk about what the key factors and risks, which will affect the demand and how they differ. So there was a question there that was asking people what they thought maybe the stumbling blocks to investing. So, Udo, from your Nigerian and even possibly a bit of your UAE experience, what are the pros and cons of both?
Right. Thank you, Bimpe. It's been quite an interesting day. I learned a lot, especially in the tax panel. All the panels have been very insightful. So just thinking from the point of view of the Nigerian market and even just global real estate, and in our context for Nigeria, I'd say global real estate is probably some of the countries we've indicated there, the UK, UAE, the US, Nigeria, and other parts of Africa. Just leaning back to some of the conversations that we had today, any astute or, let's say, refined investor needs to always start from the point of view of why are you investing? Where are you in your journey of investments? Whether as a family office, or even as a business. And that will largely shape where you choose to invest. We've heard, inheritance taxes in the UK at 40%. That's part of your wealth consideration, and real estate is a critical, central asset within your wealth creation. And so clearly, when you're thinking whether in the short term or in the long term, you are going to take into account some of those considerations. When you think about Nigeria, you think about inheritance tax also, but it's more so capital gains tax, and some of those things that used to protect people are being removed, as we heard, in terms of some of the tax reforms that are coming on stream in the near future. But back to the central question. When we talk about, the current global economy, globalization is something that cannot be ignored. And so, as a Nigerian, you can now live in Dubai, you can live in London, you can live in the US, you can live in various places. And so ultimately, you think as a local person, but you think in terms of access, where will your money go the farthest? Today, but also in 10 years, in 20 years. What do I mean by that? If you think about, we operate mainly in the upper quartile, the luxury space in Nigeria. So I'll use some examples like Banana Island, Eco-Atlantic, Ikoyi, Victoria Island. So 5 years ago in 2020, Banana Island was on at about 450,000 naira per square meter, which if you convert is about $1 million, was about $1 million. In today's money, in 2025, 5 years later, it's about 3.5 billion naira to 4 billion naira. So in dollars, you're talking about $2,500 versus $1,000. So if you do the calculation, you can see that there's definite growth from a global currency standpoint. Take Dubai and say, what is the price per square meter for Dubai today in similar locations? It's about $3,500 to about $5,000 for the high growth areas, the Business Bay, Jumeirah Island, those central locations as it were, which you could, I guess, compare to your Ikoyi, Banana Island and all of that. But when you look at infrastructure, when you look at past track record, 5 years ago or even 20 years ago, you'll see that the growth in Dubai is significantly more from the point of view of being steady and the fundamentals that actually underpin. You're talking about, population growth. You're talking about visionary leadership. You're talking about infrastructure that is, next year in 2026, they're going to have flying taxis, right? That's how futuristic their thinking, as it were, whereas we're still talking about clean energy, dirty energy, we're still talking about potholes in our highest, ranking locations, as it were. Those are not considerations to ignore. However, as a Nigerian, your first hat is a local hat. And then your next thing is then what's your timeline? Because you can't take all your money and go to Dubai or London. Talking about London, London is an established market. Legacy, educational connections, steady yields, as it were, but very slow, very low. And especially now with some of the things we've heard today, the num-dum, changes, the inheritance taxes, and all those things happening, as it were. When you think about it and you have options globally, the question is that still the best place, as it were? But it depends on who you're asking. If your kids are going to be going to school over the next 5 years or 10 years or 15 years, perhaps your considerations are different. So just to summarize, what I'll say is that what we're seeing with our clients, who are mainly ultra high net worth clients, is that the first question is always, who are you? How are you thinking? What's your stage of investment? What are your values? What is it that you're building for, as it were? And what we're seeing is that people have dual hats they're wearing. They have their local hats and their local funds, as it were, and they're putting on the long game because you have, as it were, a cultural connection to Nigeria. The growth is here. It's an emerging market. It's a frontier market. It's a high-risk market, but it is a growth market. So there's no astute investor that is going to ignore Nigeria. But there's no astute investor that will also just stay local, because the world is now global. So it really comes down to understanding the critical drivers of, one, confidence, and two, returns. I don't know if this is a good time to say, but if I had $1 million and I gave you all $1 million today, I'm talking to the Nigerians specifically, how would you allocate it? Don't answer yet, just think about it. You have a free $1 million check, and you have the opportunity of making the investment. What would be your considerations, and how would you invest it, and where would you invest that $1 million? Back to you, Bimpe.
Thank you, Edo. So I'm going to give Yomi the opportunity to tickle our imagination as to how that $1 million can be used onshore Nigeria in offshore Alaro City.
I saw at least 3 people say Alaro City when she said, where would you invest the $1 million, which is what I was also thinking. I just didn't know I'd get the opportunity to speak next. But sincerely, I would, and I'll tell you why. It might surprise you to know that over 60% of our sales to individuals, i.e. not companies, over the last 2 years has come from Nigerians in the diaspora. So these are hardworking, highly intelligent, successful people who are earning hard currency, who have decent mobility and can put that money anywhere. And like you, we can see it at the back. The answer to the question, which real estate market do you currently think presents the best opportunity, says Nigeria. There was another question that said, where would you invest if you had to invest within the next 12 months? And it said Nigeria. They'll show it on the screen later. Fundamentally, it's about location, it's about currency, and it's about tax and duty incentives. So on location, on the macro, we understand. Pick any continent in the world, Asia, Africa. You go to the largest population, the largest or one of the largest economies, and you go to the commercial hub, the commercial capital of that country, in the position of that continent, okay? So this is the population leader, it is the industry and economy leader, and you have gone to the commercial capital city. This city happens to be the most populated city in the country, as Lagos is, and the fastest growing in real terms. It also is the smallest by landmass in terms of the geography. So in terms of the supply-demand dynamic, it's clear. There is a lot of demand, particularly if you look at the rate of urbanization, people moving from rural areas to urban areas for economic opportunity and otherwise. It is clear that any continent, forget Africa, forget Nigeria, forget Lagos, where you have this dynamic, there is going to be significant value in real estate. And the medium to long term prospects are going to be strong. That applies in Lagos. So bring it down from the macro to the micro. Why would I invest in Alaro City in Lagos? Because of the second factor, currency. So location, we've identified in the earlier panel that the Lekki-Epe axis is what they're referring to as New Lagos. It's where the majority of public and private spend is moving in terms of infrastructure and real estate. It's where the new airport is going to be sited. It's been in the press. It's been approved by the Federal Executive Council. It's where the largest seaport in West Africa, larger than Apapa, deeper than Apapa, has been operating for over 2 years, changing the nature of international trade with not just Nigeria, but the region. It is where the largest free zone, a hub for economic value creation, is located. Largest free zone in West Africa is in that axis. It's where Alaro City is. And once you are there, you tackle the real issue. The real issue is currency. A lot of people are investing in Canada, investing in the UK, they're investing in Dubai to generate passive income in hard currency. I saw a very distinguished gentleman shaking his head, but I will convince him. So, this passive income that you are generating, the operational currency in free zones in Nigeria is United States dollars. We have landlords, clients of ours that are generating hard currency rent, which leads to my next point, tax-free in the free zone. Earlier panel we discussed, this is about wealth creation, wealth preservation, generational wealth transference, capital gains, Madame mentioned it, and inheritance tax, Madame mentioned it. Would I surprise you to tell you that, and there are lawyers here today, I'm happy to be corrected, Mr. Femi Wright, a tax lawyer nonetheless. Capital gains tax in the free zone, sir. 0. Inheritance tax. 0. Your real estate is located in the free zone. It stays in the free zone. Federal, state, local government taxes do not apply. So that also is linked to your yield. Your net yield, I believe, is more impressive. And Madame, I won't take umbrage. She excluded Alaro City from the upper quarter of luxury. And I think only because she knows Alaro City is mixed use, right? So we're a little bit of something for everybody. And the truth is that where we are, wherever that falls, right, our net yield is higher than Dubai. And I will take it on a case by case. And it's higher than most prime locations in the UK and even the other locations, whether it be student housing or young professional housing. Most of our clients and most of us as promoters are invested in all of these jurisdictions as well. And we pay tax. So when you look at the net yield and when you look at the growth prospect for Nigeria and Lagos in particular, ideal strategic location in the free zone in an area of growth, considerable spend, medium to long-term value appreciation, and today and tomorrow, tax benefits. And even if you should buy land and build with that $1 million, it is cheaper to build in the free zone than anywhere else in Nigeria. Because you're not paying duty on any of your imports, you're not paying VAT on any of your purchase for raw materials, goods and services domestically. And you should use a construction company that's registered as a free zone enterprise because they're not paying 30% corporate income tax. That results in savings for you. So that's where I would spend my $1 million.
Hey, right. So, Oliver, the UK, I would say if I asked this question to this same room 5 years ago, I bet you the UK would have been number one. It's still relevant. I live in London, I've lived there for many years, and I know that there are still opportunities for that million wicked pounds. So maybe you want to share with us, Udo, why the UK is still an attractive destination. I mean, Udo did refer to the fact that whether we like it or not, there are other reasons we need to take into consideration, not just the returns, but our lifestyle, family needs, etc. So what have you seen from where you are, and why the UK is still attractive to the non-resident people like that?
I think firstly I'm convinced by the by the $1 million question. Thank you, Bimpe. May I express my thanks and gratitude for the invitation here. So, hello, I'm Oliver Little. I'm a partner at Charles Russell Speechlys, and I work in the international private client team. I went back to the initial question, which was factors and risks about investing in the respective jurisdictions, and I'm coming from a UK perspective, and I scribbled some down over lunch, last-minute preparation. So I can't add to the excellent summary that my colleague on the panel said about various other reasons why individuals would choose to invest their money in different jurisdictions. But coming to it and adding a few further, if I may, the UK offers a stable market. It has done for many, many generations. We have a strong regulatory and legal framework that protects investors and allows them to generate revenue and capital appreciation. Capital appreciation has historically not been as good as Banana Island of late, I'm afraid, but has historically been significantly beneficial in the UK. Late in 2024, Savills released their 2025 forecast for capital appreciation in the UK, and in London, it was 3% on residential properties in 2025, and by the end of 2029, they're expecting 17.1% capital appreciation, and the rental yield will follow that as well, the same trend. We can look to diversification. The UK doesn't doesn't preclude any foreign investor from investing into residential commercial investments in the UK. There are also further investments that one can have, so the student accommodation, which is particularly pertinent at the moment. There is retail investment, there's the mixed-use developments, and I know a question that was raised when we were discussing this was real estate investment trusts as well. So we don't currently have any preclusion on individuals investing in those, and they offer tax advantages for non-UK residents. They're freely tradable on the London Stock Exchange, so therefore anyone the world over, particularly in Nigeria, is able to invest in those products. We have mentioned tax. A number of previous sort of panels discussed tax. Of course, the abolition of the non-dom regime is a significant change in the UK tax landscape, and that will dissuade a lot of people from migrating to the UK to live there. That doesn't necessarily mean that investing in the UK can be tax inefficient. With suitable planning in advance, you can still have tax-efficient planning by real estate investments, whether that's buying residential property in personal names and putting in place English wills. We have full freedom testamentary disposition in the UK, even for foreigners who are forced to pass their assets by forced succession regimes.
So thank you, Oliver. Definitely, I mean, the UK is still of interest, and I'd like Adeola to please give us a 0 round or so. Yes. So I'd like to give us a perspective of investing in Nigeria from a legal point of view, because whether like it or not, what the returns are, the attraction from a growth, etc. point of view is in Nigeria. There are some legal issues we need to be mindful of, and that's possible risk we have to prepare for. Can you give us your sort of perspective on that?
All right, thanks so much, Bimpe. And yes, it's Nigeria for me. It's not UAE, it's not UK, it's not US, it's Nigeria. And then I will consider Alaro City. But yes, from the legal perspective, it would appear that part of the advantages that the UK has, the UAE has, is that it appears that they have codified or settled legal regimes. But again, the advantage that it appears that the UK has is also their disadvantage. Nigeria is evolving, and we have a lot of laws. We are trying out a lot of models. I am aware that the big elephant in the room that people usually would refer to is that our Land Use Act makes it impossible for aliens to own properties in Nigeria. But indeed, our legal regime and regulatory authorities have been so lax to allow some other avenues by which you can circumvent this procedure. And if you look at Alaro City, you look at Banana Island, you look at Eco Atlantic, there are a lot of aliens investing here. In other words, the legal regime and the legal framework with respect to these restrictions are in themselves not absolute. A couple of persons are investing in Nigeria through other means in a manner in which they also take advantage of the various free trade zones, mechanisms, tax incentives, and the like. So really for me, when it comes to the legal regime in Nigeria, it's very flexible. And it's so flexible that it is better for you to invest in Nigeria, given the fact that we are currently in a transition mode in Nigeria. Nigeria is evolving. And before we get to the point where we are like UK, UAE, and the likes, it's important for you to take advantage of this legal regime. In addition, people talk about the UAE, people talk about the UK, and I say Odo as tactically, she's marketed the UAE and the UK. But I kind of disagree with that. Nigeria is the future. Nigeria is the future because when you look at the land mass in Nigeria, as of today, arguably you would say, given our population explosion, and it will continue to explode, given the economic drivers in Nigeria, given the infrastructural demands and investments going on currently in the country, Nigeria is the place to go. There's going to be increased demand for housing. There's going to be increased demand for commercial use. There's going to be increased demand for agribusiness. There is a whole lot to take advantage of in Nigeria. The legal and the regulatory requirements in Nigeria are so lax that makes it easy for you to get in and also to get out. The guys from the tax panel have spoken extensively about why Nigeria is better off for you. And I am telling you again, come to Nigeria.
Great, thank you. Yeah, actually, I want to chat on a legal question, and I think Udo also wants to comment. So, again, from a legal point of view, this is an issue that I think many people, and as an advisor, myself, who is a Nigerian qualified lawyer. So, the Land Use Act created title in, I would say, most of the land in Nigeria, except some patches that are owned by the federal government for 99 years, and that was in 1978. So I can imagine that if you invested in high-value real estate, possibly and that's where the UK is different. In the UK, we can have 999 years, we can have a freehold. What do you say to a family, and I'd like you to, and I know those a lawyer as well, who is looking at investing in something that's of significant value, but only has 40 years left, and you're about to pay $2 million for it? How do you tackle that?
All right. And thank you once again, Bimpe, for this fantastic question. And it's something that has come up repeatedly in Nigeria. And I will just quickly go down memory lane briefly so that we would appreciate where we are and then where we are going to. When the Land Use Act came into force in 1978, 99 years was not the predominant title number of years that they gave people. And so if you go back to the old land certificate and land title documents for properties in the eyebrow areas in Lagos, VI, Ikoyi, you would see that initially they were granted 45 years, some people were granted 49 years, some were granted 50 years. And then subsequently, when the government came to some form of conclusion to begin to grant people 99 years, they renewed for people. Now, the process of renewal is not as difficult as most people think it is. What it just means is that if as of today you are investing in a property and the term of years remaining is 10 years, you can still invest. All you just need to do is to engage, and again, I won't give you the full advice here, just contact me after here. What you just need to do is engage your advisors, they approach the government, the term of years can be renewed for an additional 99 years. And in fact, when that 99 years expires, you can further renew it for minimal fee. But I wouldn't say that the term of years is sufficient restriction for you not to invest in Nigeria.
I think that's news to me. I kind of thought that 99 years minus 1 day, the government will come and say, give me the keys. So, I think you got...
Okay, so the first thing I want to say is, we're having a debate and we want to make it interesting for you. I hope you understand that. I believe in Nigeria. But I asked you a question, right? We're investors. We're trying to preserve wealth. We're trying to grow wealth, right? And so we have to think as investors, right? And so some of these things, if you don't have visa to the UAE, for example, it's a bit tricky, right? To say, no matter what the growth is, let me go and invest in the UAE, for example. No matter how great the UK is, if you have mobility restrictions, Nigeria is better for you. Nigeria has a population of 200 million people and counting. So the first level of smart money will always be Nigeria, for many reasons that we've alluded to: cultural, family connections, legacy, all of those things, and then growth. The very idea of a developing economy means there's development, there's growth, and growth is equal to return to a large extent. However, we can't ignore devaluation. And I'm going to use real life examples. Families, including family offices, people who set up trusts, who are sophisticated, have these assets in Ikoyi, Victoria Island, and these highbrow areas 10 years ago, 15 years ago, getting rent in dollars at $100,000 a unit, $80,000, $70,000. Those units were sold for $1.5 million, and you were getting that sort of yield in dollars in Nigeria. Excellent. Fast forward 10 years later, with devaluation, with the economic, shake-ups, whether it's COVID, whether it's a global meltdown, all the things that we've all experienced, those same assets are now commanding Naira rentals. Matter of fact, we're just talking about one right here in Victoria Island, not too far from here. Used to get $80,000 for a block of, say, 24 apartments that were sold at $1.5 million each, or about $1 million to 1.2. Now the rental is about 30 to 40 something million Naira. What's that in dollars? That's 20 something thousand dollars. You're now in your retirement years. You're now relying on this asset to deliver 80 times 20 units, $1.6 million on an ongoing basis, even if it stayed flat. All of a sudden, you're getting 30 times 20. That's what? About $600,000. What have you lost? That's a real consideration that investors, Nigerian investors, are grappling with. So no matter how we want to quote it, the world is global. And it's important that as a country, as a government, as, professionals, advisors, and all that, that we show the full context so that people can make informed decisions. If you're at the early stage of your career and you only have access to a few, tens of million Naira, please buy land specifically. Because based on our research, actually investing and locking down land will return a higher yield for you over time and time again. And I'm happy to avail that research to W8 over actually buying something that is built for whatever reason. And our question is why? And we don't have enough time to go into that. But the point is, if you bought Banana Island, 7 million, 20-something years ago, if you bought Orange Island, I dare say if you bought Alaro City, now that he has bought us into Alaro City, which, by the way, in fairness, honestly, part of my $1 million, I've already moved at least 300 to Alaro City. I don't know how you guys are allocating yours, but I'm definitely putting, for all the reasons he said, I'm saving on taxes. It's a no-brainer. Infrastructure, all the things that we're referring to, you don't have to deal with that there. I'm not marketing Alaro City. I'm just saying that as an investor, you have to take into account these considerations, right? So you're thinking about today, you're thinking about 5 years, you're thinking about 10 years. You must think diversification. You must put on a global hat while rooting in your local foundation, as it were. We also had impact, really, real estate is not just about owning property and profit. You also have to be thinking that you're a builder of the nation that you're from. But wealth is not only sentimental, it's also strategic. I'll stop there.
Amen. So, I need to respond, but actually, you're going to respond, but I also just want you to, respond in a, I know that Alaro is close to your heart, but my question to you, if I was sitting next to opposite the table, looking at Alaro and saying, I really want to diversify, I really want to balance my domestic international portfolio, and yet, so encouraging me to spend, 900,000, my 1 million with you. So in response to those issues, how does Alaro, how do you see the way in which a Nigerian family office or HNI can diversify their real estate portfolio?
Sure, thanks. I want to agree that diversification is the name of the game, okay? And most of the people at Alaro City are highly diversified within the country and outside of the country. So it's not a competition, there are just multiple options that make sense. But there is something unique about Alaro City because of its free zone or special economic zone status, which other special economic zones or free zones benefit from as well. And that is that even for the young person that has only a few million naira. Use your few million naira in the high growth jurisdiction of Nigeria that you know well, you know the legal system, you can see the land, you can visit the land. Use it to buy into a hard currency generating asset. Because there is this correlation we have made between investing in Nigeria and taking currency risk. And that's what the free zone gives you, that neither outside of the free zone in Nigeria or foreign jurisdictions give you. You are able to be in the high growth of Nigeria and you are able to avoid the currency devaluation risk. I give you a real life example, my example. So I have been looking at Alaro City and the Lekki Free Zone since 2010. Alaro City launched in January 2019. We wrote the concept paper in 2010. We were dealing with Governor Fashola at that point in time, transitioned to Oyebode to the current administration. We didn't get our first certificate of occupancy until 2017, Q4. So we have been looking at this area and we knew what was coming. And based off that, being rational, I said, you know what, I'm going to bet on this axis personally. I bought land in 2019 outside of Alaro City because, as I said in the earlier panel, it is more than Alaro City. It is about New Lagos and the migration of New Lagos to New Lagos to New Lagos, from the mainland to Lagos Island and Marina to VI on Oniru and down the Lekki Peninsula, which is the last of Lagos going to the east. After Ekpe is a neighboring state. You've finished. There's only land in the west going to Badagry, and in the east going to Ekpe. Lagos is the smallest state in the nation. So it's a supply-demand fundamental issue. Now, when I invested outside of the free zone, at that time, for every $100,000, I would get 36 million naira. It was a transaction outside of the free zone I invested in naira. Okay? That transaction increased over 4 times in naira. Fantastic, 4x. Okay? But because of the valuation, as Madame mentioned, for every 100,000 that I invested in today, it's about $70,000 after the material uplift in the valuation, naira valuation. My investment at the same time, because again, I can't be the MD of Alaro City and you're asking me, so where is your own land? And I say, I didn't buy. I don't believe in my own project. So I happen to believe, and then for strategic reasons, it doesn't matter. I have to invest. So I invested in Alaro City. I didn't do 4x. I did about 1.2 in hard currency. I used naira to buy a dollar asset. Okay, we looked at the exchange rate, and for every 100,000 we converted it, I invested. $100,000 become $120,000. You can do the math. Today that's about 380 million naira for every 36 million I invested then. And so when you look at the returns in naira, it's significant, 12 to 15x. When you look at the return in dollars, it's 1.2. So what we are trying to do is be cool-headed and objective and say, how do I create and preserve wealth? Now, in addition to avoiding the currency, I mentioned the tax. It is a real benefit. Look at net yields after tax. It is a real benefit. The last point I'll make is 3, just points of information. She's correct. I'm passionate about Alaro City. I think it's okay to be passionate about some things, okay? Number 1, Esquire, my learned colleague, you are correct, but I know many investors here will not be that comfortable relying on lax application of law to make long-term investment. Alaro City is in the free zone. By law, there is no restriction on foreign ownership. So it's not about alien, non-alien, they will enforce, they will not enforce. It is expressly permitted, foreign ownership. So by entity, if you have a holding company, or by citizenship for a natural person, it is permitted to invest directly into the free zone, into Alaro City. Number 2, there is no restriction on repatriation of capital outside of the country. You don't have to go to the CBN. You don't need to go to NOTAP for approval. You can move your money. Number 3, just point of information, he is correct. Because again, I've invested outside of the free zone. There are many attractive lands, including in the top 25%, that you will only have 35 years, 40 years. And you will go back to Lagos State, and you will have to renew. And the fee is not small. It's not the same as buying your land again, but it, to me, is a material sum that you will pay to extend, if you're looking to extend for a material period of time, 50 years plus. I've been through the process, right? Alaro City factually has over 90 years on the lease. It's a Lagos State C of O that was issued in 2017 for one piece and 2019 for the other piece. So for investors, there is long-term title.
Great, I think that hopefully evens the scores. Oliver, again, I think I'd like to ask you a question about megatrends. I think wherever we are in the world, we all are familiar with remote working. That thing that WFH, that COVID delivered and has kind of kept us, has changed our lives. And I'm wondering, that's a megatrend. And how do you see that kind of thing, migration, remote work, how do you see that shaping global real estate?
Thank you. It's a very good question. I think we have to weigh two competing things together. So we have the effect of COVID and people wanting to work remotely, but we also have the urbanisation of a lot of countries. So the UK in particular, London is growing and has been exponentially. There are other cities in the UK that are growing even quicker. Manchester, which is close to my heart, where I'm from. But you look at that in the case of investors. The cost of buying commercial real estate in London is changing, and that is because people do want to work from home. We have the ability to work from home remotely. We have agile devices. Everyone can check their mobile phones wherever they are now. So therefore, fewer people are going into these commercial real estate buildings, and therefore that is having an impact on yields significantly. A lot of buildings, a lot of companies are trying to rationalise the space that they have, and therefore they're having to dispose of floors, for example, that they don't have. So the yield for investors is going to be reduced. I think there was another point that I wanted to talk about trends as well, and we're seeing this quite a lot in the UK at the moment, and I don't know if the rest of the world is catching up or has even overtaken us, but we have this thing called smart buildings, where we have buildings that aren't just fit for commercial use anymore. They have a multi-purpose and they have to be changeable. A lot of companies that are entering into these commercial real estate buildings are demanding that their buildings are smart buildings. And in order to do that, there has to be a lot of investment put into these buildings in order to convert them into the building that's fit for purpose. Now, where does that money come out of? Clearly, the investors are going to have to yield a bit of that. The cost gets passed down to the tenants of those buildings, of course they do, but ultimately there's a trade-off between those two. There was a risk, and I know we're sort of slightly running out of time here, there's something I mentioned before, and I agree with everything that my colleagues on this panel have said before. The UK is still an attractive place to invest. We talked about diversification. You as business owners, you as trusted advisors know that in a completely global world, there are significant external factors that disrupt the yields and the returns that investors can get. So you have to have a fully diversified portfolio, and that means looking at UK real estate investments, for example, which are still giving good returns, notwithstanding the depreciation of the value of those assets. From a UK perspective, not wanting to do myself out of any investment here, that the cost of entry into the UK real estate market is quite high. If you're looking at a residential perspective, it can, for a non-UK resident individual who already owns property anywhere else in the world, be as much as 19% on the market value of the property, which is a significant amount. On commercial real estate, it's significantly less, it's up to 5%. And on mixed use, it's 5% as well. So there are various ploys and tactics that people can use to diversify their portfolio to ensure that they get the best yield possible.
Great, thank you. Time is up, but I kind of have a question, surprise question for the panelists, and I just wanted you to give me the one-word answer. So, diversification of investment portfolios as a way of really growing, preserving wealth. What percentage, and I start with Adeola, what percentage of a portfolio would you could decide, and I'm going to maybe help you a bit. So this is someone who is aged between 45 and 60. What percentage of that person's portfolio do you think should be real estate? Doesn't matter where, just one word.
I would say 40%. I would say 40%.
I would say it depends. I would say it depends. It depends. It depends on your own vision. It depends on your competence, what you have access to. I'm in that age range. I would do a solid 70%, right? Because I have the expertise, I have the access to off-market intel opportunities, and there are clients who have access to that. So it really depends, is what I would say.
And Yomi, again, not geographical, what percentage?
100.
I agree with Madam. And 45 to 65 is a big range, so I will to 60. I would say between 50 to 70 would be my recommendation.
Again, it's completely fact dependent, but I would say less than 50. I'd be closer to 40%, maybe even, depending on your outlook, a little bit less, 35.
And the Yomi is more conservative. Because I probably would 50, to be honest. But you're right. I think it's depends on how much. I think you're both very skilled. That's why we're much more bullish. And I guess people like us have not only lawyers and conservatives, we're probably not as high risk takers. And I think one thing we all agree is that property, and for various reasons, needs to be well thought out in different jurisdictions, whether commercial, whether retail, whether residential, whether it's a smart building, whether it's built sustainably. I think we all agree that real estate should be part of your investment portfolio, for reasons of store of wealth, preservation, and definitely for transfer to the next generation. So thank you. I'm hoping we have some questions,
Yes.
any Q&A.
Yes. We're going to see, but maybe from the hall, before we put up the ones that we have there. If anybody's seated, I want to ask. You see everybody's hands up? Okay, we have two people on this end. Where's the microphone, please? It's coming. There you go.
Good afternoon. Am I meant to introduce myself or I just talk?
Introduce.
Oh, okay, sorry.
Yes.
My name is Adeola. I'm an architect.
The 45 to what was the age?
No, I'm not here to invest. I'm here to give some advice. I missed the complete discussion because I was at a tender negotiation on a project. But I wanted to just give an insight into what has been said regarding the $60,000, $100,000. It was true that that investment was there. And now, even though you don't get $100,000, how do we get proper return on investment? And I'm sure the people on the table will know it's to do with efficient design. You see, at the end of the day, cost of construction is cost of construction. But if you walk around here, so for developers, if you design an efficient building, it will allow you to get your return on investment. What happens now is whether you build in VI, whether you build in Sulere, the cost of construction is still the same because there's no proper intervention in the design. So what you need to do as developers to ensure that there's a return on investment is to make sure you design your buildings efficiently. And, I mean, for example, if you're doing housing, for example, ground to first, you shouldn't really be using reinforcement because reinforcement costs money. You should be using structured blocks, which should be cheaper and more efficient. And then you'll be able to get in your building at a cheaper rate and you'll be able to pass that income on to the owners and you'll be able to get a better return on investment. I'm not selling myself as an architect, but that is the reality.
I was just going to go there.
No, that is the reality. The efficient design will lead to it. When we had $100,000, don't forget they were developing the mobile block. Everybody moved out for 5 years, and they're the ones that increased the cost. But you can still get your, at 50 million naira, like you said, that's what people are getting in Banana. You need to design a building that will allow your return on investment on 50 million naira. What you have is, you're getting 50 million naira, but the cost of construction is so high that you pass it on to the owner. So I agree with the panel that, yes, you need to invest in property here. Property market is definitely going to get better because you're going to get better efficient design. And yes, I agree, investing in land is important, but I still think you can still invest in bricks and mortar when the developers start to get the efficient building and the cost down, which is going to be possible. Thank you.
Thank you, Mr. Lawi. I guess it's very important advice. Anybody on this side? We have one person here still waiting. Do we have anybody on this end to be safe? Okay, sir, please go ahead.
Thank you. I have a question for the whole panel. This is really about, some of the things that Mr. Yomi talked about in regards to the appreciation and capital appreciation for somewhere like Alaro versus international markets. If you have the capital and the access to international markets, as I'm sure many astute or high net worth investors do, and are therefore considering it, and you look at an area like the UAE that you may be getting 20 to 40% capital appreciation over, let's say, 5 years, and you also have zero taxes, very similar to Alaro City and the free trade zone. What are you using as your real comparison to invest in the UAE versus investing in places like Alaro City, especially when when you're getting back hard currency in the UAE, versus maybe you're having to convert to Naira in Nigeria, and then you're looking at the devaluation, you're looking at inflation. That comparison between like the UAE and maybe other high yield international markets, what is the real comparison that you're looking at? And as an astute or high net worth investor, why would I look at Nigeria over other international markets perhaps when you can get that same or even higher capital appreciation on your initial investment in hard currency?
Hey, lots of facts. I don't know how you're going to do this. So, well, I'll give you to the obvious person first. Yes.
Well, I mean, in real estate, we say there are 5 W's. The first one is who is investing. The second one is why are you investing. The third one is where do you want to invest? Because the where will tie to your why. And then when you go beyond that, is now what are you investing in? Because you can go into wherever. For example, if it was in Lagos, it could be hospitality, it could be office, it could be, homes, all that stuff, right? So to the question that you asked, very important question, and I think that's what we've all been saying, that each investor must have a clear vision. And based on that vision, you make the decision that is in line with where you want to go. But if I was to answer it specifically and say capital is neutral and I'm trying to create wealth, I would be trying to project one. From a stability point of view, if I'm getting dollars here today and I'm getting dollars that is the same, for example, the UAE, 20 years ago, we were selling and investing actively in the UAE. The exchange rate was 3.5, between 3.3 to 3.5. Today, it's still about the same, which means that the investment you made then and now, from a global currency point of view, is still the same. The appreciation is what you've already referred to, whereas in Nigeria, it's not quite that. We can't guarantee that in 10 years, any dollar-denominated income or whatever will be what it is here. We even have laws that actually say, separate from the places where it's been ring-fenced, like Alaro City, where actually we're not meant to use foreign currency for trading and transacting in Nigeria. So those are real risks that you will think about. But what if you were buying because you're a young family or you are a retiring family? What would you do? Your considerations will be different versus if you were trying to do an investment property to grow your fund, to grow your capital, and also to ensure and protect it. So you make your decisions based on that. Some things don't require a straightforward answer. They require helping you to see and think through.
They require advice. That's what they determine. They require advice. That's what this conference is. So they usually tell you one size fits all when it comes to investing and real estate. And I always, maybe we should even just say that everything you've heard today is not advice. If you want advice whether on tax, whether on real estate, I think you do need to see the specialists, see the illegal real estate developers, and get advice that is relevant to your particular situation. But that's very important. Did you want any other questions?
Just to say that people in this room will still invest in the UAE.
Yes, well, oh gosh, okay. If you're planning a property investment in the next 12 months, which country are you most likely to invest in? So the UAE is. But UAE and Nigeria are about the same.
They're almost, next to
neck.
Good afternoon. Just a practical question. When you have clients who've invested in the UAE and they have challenges around getting visas, how have you resolved that? Like getting golden visa issued? What's a solution for them?
Okay, just point of clarification. I'm not representing the UAE market on this panel. That said, we do, support our clients to invest. UK was actually our, primary market. We did South Africa and the UAE, that, in a sense, tri-market. But to your question, someone referred to it earlier, the gentleman who talked about the UAE.
Right, yeah.
Exactly. When you invest in property up to, say, $500,000 and you even pay just 20%, you are actually entitled to a golden residence visa. So I alluded to it earlier that the issue of mobility is a thing to consider. investing in assets beyond your immediate location. As an investor, you have to think of management, you have to think of access, and all of those things. So that's an important question to consider. That said, the UAE is extremely proactive about expanding the pool of high net worth clients who are moving to the UAE from all over the world. They actually have set up an office to actually work with Africans. I think he also alluded to that, yes. As long as your money, your source of wealth is straight line and clear, and you have something that you're doing, you have no problem getting those visas, including the residency, based on real estate and other things, including being a professional, being an entrepreneur, even being an influencer. There are visas for that, right? That's how proactive the UAE is about bringing people.
I think he wants to just come from.
Yeah, hi. Well, you just took my question away from me. And quite rightfully so, because it's such a really, really interesting topic, because as a panel, you've discussed UAE, you've discussed Nigeria, you've discussed the UK primarily, and you've compared apples with apples, you know, real estate, growth, yield, the typical real estate indicators. But as you quite rightfully said, you know, when you're considering real estate, I mean, what are you getting out of it? Are you getting a residency permit? Are you getting citizenship? You know, is this giving me my plan B for the future, and all these different factors? But I think that moving on in the future, that there'll be other indicators within the real estate market. I mean, for example, you know, is a building AI friendly? Is it built to, say, I don't know, be friendly towards humanoid robots, as Elon Musk now is very much in the final stage of the Tesla robot? And so will buildings be designed in a certain way in Alone City, for example? You know, have you thought of that? You know, what are the plans in the future? Because all of these factors will be very, very increasingly more important in the future. Thank you.
Thank you very much. And I believe we're coming to the end of our...
Yes, what I just thought about it. We have a quick comment from, just a quick comment. Do you know why I'm allowing that? Quite frankly, everybody's not really hungry, you know. So our tea break will just be a leg stretch. So we'll make it 5 minutes so we can drill down on this very well. Please go ahead. You can use my, okay. Just go ahead.
Okay, no, I just wanted to comment on the UAE visa thing, particularly for Dubai. And I think Devrat, who is our ALN partner, spoke about it, and he's based in Dubai. But we were actually approached, Aluko and Oyebode, by one of the offices responsible for issuing the visa in Dubai, and saying that can we support them to help them vet high net worth Nigerians. And I think that's the critical thing. So the UAE, even though it appears as if they're not welcoming to Nigerians, they're welcoming to high net worth Nigerians, and they're actually actively seeking those high net worth people like yourselves in this room, and they want and they've asked people like us to help them vet and to help them recommend. So they've actually reached out to say it's not, we want some Nigerians. So just so that we're clear about that. Thank you.
Thank you. Yomi has a quick comment.
Yeah, I just
okay.
Hello. Yeah, I just wanted to respond to the gentleman's question about mobility of capital, and if you have two options, it's going to come down to your like Madame said, the 5 W's. Who are you and what are your objectives, and your perception of risk. Right? Because the truth is that I have clients, I'm not saying this to be funny, I love Dubai, no issue, but I have a client at Alaro City by chance who was also invested in the UK and in the UAE. And of all of those jurisdictions, if you ask him which country will you wake up in 20 years and the land law or visa or any other rules could be completely 180 different from what they are today, he will say it's the UAE. Probably on the other side is the UK, probably most settled, well-established, long-term, and after that, he would rank Nigeria. On balance, I probably agree. And even this thing with Nigerians and access to Dubai is actually a proof of point, right? Now, when I look at another environment like China, we had a person that was looking to do a residential development. They have many options for residents. So this is who and what are your objectives. They ended up looking at Nigeria, they ended up looking at Alaro City, they liked the high growth, they're very comfortable with Africa and Nigeria risk, they ended up going elsewhere. Sister company, same group, needed access to cheap labor, raw materials, gas, okay, which we have in abundance, and they ended up picking Nigeria over Kazakhstan, right next to China. Why? Another factor, international trade. They were projecting ahead the current trade situation in the world. And they projected that Africa on average would have lower tariffs than Asia and the usual suspects like Cambodia, Vietnam, and the rest, including Kazakhstan, that would likely get caught up with China. And so they ended up picking Nigeria. So you're right, money can go anywhere, and it depends who is the person and what are they looking for. Yeah? For what it's worth, I think logistics, in this day and age, the importance of supply chain, and I look at the low base from which we are growing from a trade perspective and the new seaport there, I think logistics is a great asset class. And by the way, no risk, no reward. Because for everybody in this room, particularly the Nigerians, if you were doing what you have been doing in another jurisdiction, chances are you wouldn't even have an invite to be here today, right? So there's nothing wrong with accepting slightly higher risk. There's also higher reward.
Thank you very much. Hopefully we a great panel. I think the depth and the sort of granularity of the knowledge of our panels is excellent. And I have to say thank you very much for being part of this panel. Oliver, Yomi, Udo, and Adeola. Thank you.